What's going on, everybody? Mando Trading here on September 26th. This video will come out September 30th, I believe. But in this video, I'm going to talk about how I avoid the chop or low probability, same meaning, low probability days. And it's a pretty simple setup, so we'll get into it in a second. If you haven't already, please subscribe, like this video, drop a comment, let me know, if there's anything you want to see or any other topics that I can kind of get into. Looking for more ideas to make some more videos and hopefully drop a little education out there. So this video is pretty quick, honestly. If you're looking for a market newsletter, check out mine, Markets with Mando. It's recently been featured on Benzinga, Webull, TOS. First month free using code August100. I'll put the link in the bio. Not that much to it, but it definitely helps to have an understanding of my trading model in itself, which I have now 4 videos of my trading model in action. But again, here we'll get into it in a more brief sense. But all right, so let's get into it. This is Tuesday's price action here. Pre-market, we had our second high, got up into a bearish fair value gap. Let's just look and see. That was following the liquidity grab right here. Swept liquidity, and we decided to dive lower. Now, let's zoom in here. And this is the specific area that I wanted to take a look at. Now, obviously, this is a large meltdown through a previous swing low, and this happened overnight in the London session, 3:15 a.m. So for me, my range set would be from this high to this low. And this is essentially a perfect example of the model and the model how I would prefer it to work. So here's how I would have this all set. Now, here's the criteria. Did we take out a swing high or low? Yes, we took out a swing low. With what price run? So fib starts at my high, down to my low. Here's our retracement back into our 50 to 79 golden pocket area. Perfect. Now, is there a bearish imbalance inside this range? Yes. Here's our bearish imbalance. We have a wick, body, wick. Both sides of this candle right here, there's no wick contesting either side. Therefore, we would consider this a bearish imbalance. So within that price range, price is a sell side imbalance and an inefficiency to the buy side. So when price gets back up into this area, the way that I look at it is like sitting on a seesaw. When you sit on one side of it and there's nobody else on the other side, you're going to weigh it down. The other side's going to be up in the air. Now, for every time we get back up into that imbalance, it's like somebody throwing a sandbag on the other side to finally balance price range out. That's why the more and more we hit into these imbalances, the less effective they become in my book. So, but this is literally the model. There's your retracement. There's your dump. Here's our low target. Did we get it? Yes, we did, right here. And we melt. So that's the ideal layout for my model, and this is how I would essentially trade off of it, with my entry being at some point within this bearish imbalance with my stop loss above. Depending on the size of the range, I would put my stop loss up in the swing high range, because I know if the swing high is taken out, the trade's going to be null and void anyways, as I would expect a bullish retracement into another high. So when those highs are taken out, or swing high, I should say, that's when I start to reevaluate. So, but that would be trading in a general day where things are working the way that we want. Now, if we were to flip this over, and again, the whole idea for this video was why there are certain setups that I'm not interested in taking trades on, and this is exactly it. Right here, we have another setup where we have a swing low taken out. That would be a bearish market structure shift. So we take out the low with what price run from this high to that low. So we map the range, And as you can see in this price swing right here, there are no bearish imbalances to be found, right? Nope, nope, nope. And the way that I look at that again, these down close candles, wick can test, there's no empty space within that candle. So I call this controlled demolition. The reason I say that is because although, within this price range here, we've dropped quite a bit. What is this, like, 60 points? We dropped 60 points, but without creating any imbalances up in this discount range. Again, 50%, 70 to 79%, that's the golden pocket area where we would look for a bearish imbalance. We have none. Therefore, price can move freely up and through, which we got to end the day. Now, you might ask, well, there was a bearish imbalance down here. How would why wouldn't you play something off of this? And again, this just goes back to, I don't value imbalances when they're in premium of a range. So again, if you were to be purchasing puts or a short at this area, you'd technically be overpaying it for it in the sense of this general range, right? Your discount would be up in this area up here. And again, I've showed this hundreds of times already, whether it was on YouTube, on Instagram, where I share my trades and stuff like that. I show it daily. And again, I just showed it to you 2 seconds ago, up in this area here. So, again, it's a beautiful thing, but there are caveats to it. And, the certain criteria that needs to be met is just having that bearish imbalance in your discount range, right? And, again, it really does set a really nice, map for your trade, where your entry is going to be, your stop loss, your take profit. All of that is essentially given to you with that imbalance formation, specifically up in this zone. So the fact that we didn't get it, this is that controlled demolition to the downside. And from there, it's not to say that I'm going to go long on this. It's to say that this isn't a favorable short setup for me. Low probability, and some chop in here too. I mean, yes, we're getting some down moves that are pretty aggressive, but here you have 5, 10, 15, 20, 25, 30, 35 minutes of straight nothing, right? You had it up here before as well. Very similar situation. Bearish market structure right here. Where is our imbalance? We don't have one, right? Same situation. You take another high. Where's our imbalance over here? Don't have one, right, for this rejection. So chop, low probability. It has to meet certain criteria for there to be a trade. So just wanted to make this one short. I dropped the thread on it on Twitter as well if you wanted to see it in written form. But that's all I got for now. So until next time, good luck with next week, and we'll talk soon.